Hey everyone, welcome back to Corporate Decoder, the place where we decode the confusing world of corporate filings today. We're diving into a filing that signals a significant shift for Carisma Therapeutics Inc., and let's just say it involves a bit of a change in scenery. This isn't your typical quarterly earnings report. Carisma Therapeutics Incorporated is making a big announcement about its stock and its future. It's essentially a notice that their time on a major stock exchange is coming to an end, and they're moving to a different trading platform. So, what is happening here on the 9th of October 2025, Carisma Therapeutics, which we LL just call the company from now on, got some news from Nasdaq, the stock market where their shares are currently traded. Nasdaq sent them a letter saying that their stock is going to be delisted, meaning it will be removed from Nasdaq. This is a pretty big deal, starting the 13th of October 2025. You won't be able to trade Carisma S common stock on Nasdaq anymore. It will be suspended. Nasdaq also mentioned that after any appeals are over, they plan to officially file paperwork with the US Securities and Exchange Commission, or the SEC, to complete this delisting. And here is a key decision. The company isn't going to fight this. They are not going to appeal Nasdaq's decision to remove them. This means they've accepted the outcome. So, if they are being kicked off Nasdaq, where will their stock trade? They've already made arrangements. The company has gotten approval to list its common stock on a different market called the OTC market. This is operated by a group called the OTC Markets Group. Think of this as moving from a major highway to a smaller road, but it is still a way for people to trade the stock. The good news, or I guess the neutral news, is that they expect their stock to start trading on this new OTC market on that same day, the 13th of October 2025, and they'll keep their current trading symbol California RM. Now, it's really important to understand what this shift means. Just because the stock will trade on the OTC market doesn't guarantee everything will be smooth sailing. The filing points out that there is no guarantee that brokers will continue to actively trade the stock, or that trading will continue at all on this new market. The company might not even be able to provide enough information for brokers to keep offering prices or quotes for their stock. This means investing in a stock on these over-the-counter markets, or OTC markets, can be much less liquid and more uncertain than trading on a major exchange like Nasdaq. This filing reveals a lot about the company's strategy moving forward. They are planning to try and sell off or get rid of whatever assets they have left. They are also preparing for an orderly wind down of their operations. This is essentially a plan to shut down the business in a controlled way, rather than just going bankrupt. And when it comes to what shareholders can expect, the filing is pretty blunt. It is unlikely there will be much money left over to give back to the shareholders after everything is sold off and the company is closed. This suggests that for existing shareholders, their investment might not recover much, if anything. Another significant possibility is that after the delisting from Nasdaq is complete, the company might file a Form 15 with the SEC if they do this. It means they will stop their regular reporting requirements. This is a big deal because companies usually have to report their financial status and other important information regularly. Suspending these obligations means there will be even less public information available about the company's activities. Now, like most corporate filings, this report includes what they call forward-looking statements. These are basically educated guesses or hopes about what might happen in the future. They use these statements to talk about their plans for trading on the OTC market, trying to sell assets, winding down operations, and potentially filing that Form 15. But here is the really crucial part of these forward-looking statements. They are based on what the management currently expects, and they come with a long list of risks and uncertainties. These risks are so significant that the actual results could be very different and much worse than what they are predicting. The filing itself warns that there are many things that could go wrong. To get the full picture of these risks, the filing directs you to look at previous reports. They mention their annual report for 2024 and their quarterly report from June 2025, and any other recent filings with the CC. This is standard practice, but it highlights that the future for this company is far from certain, and there are many potential pitfalls they could encounter. And finally, the report is signed off by Stephen Kelly, who holds the titles of President and Chief Executive Officer. This signature basically means he is confirming that the information in the filing is accurate to the best of his knowledge. So, what is the takeaway from all of this? Carisma Therapeutics Inc. is essentially in the process of winding down its operations and moving its stock to a less regulated and less liquid market. This isn't a sign of growth or expansion. It points towards a company that is likely facing significant financial challenges and is moving towards liquidation or a complete shutdown. The shift to the OTC market is a step away from the transparency and liquidity of a major exchange like Nasdaq. Investors who are still holding shares should be extremely cautious, as the future trading of the stock is uncertain, and the chances of recovering their investment appear slim based on the company's own statements. The decision to potentially suspend reporting obligations further reduces the visibility into the company's remaining activities. It is a story of likely contraction and eventual cessation of operations. Alright, that is our deep dive into Carisma Therapeutics Incorporated's latest filing. What is your take on this corporate transition and what it means for investors? Let us know your thoughts in the comments below. If you found this analysis helpful, give this video a like and subscribe for more breakdowns of complex corporate documents. And don't forget to join our Discord community, linked in the description. Thanks for watching, and we'll see you in the next one.